Friends, thanks so much for tuning in. We have Andy Hoffman from Miles Franklin back on the line for a precious metals and economic collapse update. And I'm eager to talk to Andy about all sorts of different things, not the least of which is the recent Comex Commitment of Traders report, which Andy says was wildly bullish for precious metals. Andy, how are you?
Good, and it's not often that I, pinpoint anything as far as times, but I don't think I've ever felt this way in the 15 years I've been in precious metals about what's going on as far as the technicals, the fundamentals, and pretty much everything else that's going on news-wise. I said for the first time maybe a week or two ago, I said there's literally no downside in precious metals, and I said that in bolded numbers because I'm sitting here looking at the state of the mining industry, the state of the economy, what the Fed is saying and doing, what the commercials on the Comex are saying and doing, and it's getting to the point where really it doesn't matter what they do anymore. There's almost no downside in gold or silver from these prices, and there's infinite upside. And I also believe, after Janet Yellen spoke on Capitol Hill last week, my podcast was called, and I was saving this title for when they actually committed to QE4, but it's Ding Dong, the Fed, and the precious metal bear market, in quotes, is dead because they've turned the corner. They can still try to hold things down. They can still try to hold the stock market up, but the end game for the tightening policy has already arrived, and pretty soon it'll be the end game for holding precious metals down anywhere near these levels. And again, we'll get into in a second what the sentiment has been in the precious metal industry here, what the prices have come down to, and the historic valuation anomalies that have made this, in my opinion, the best buy opportunity that we've seen since the bottom of the 2008 crisis.
Well, let's review this article that you released on Monday, Andy, regarding the Commitment of Traders report, which many of us actually don't want to even follow because we know the metals are manipulated, but it is important to know what these banksters are up to. And you wrote, Friday's Comex COT report was wildly precious metals bullish as quite obviously the cartel's July 4th holiday week paper smash was enacted solely to utilize paper-thin trading conditions to further cover naked shorts. What are they doing, Andy? Are they going long? Why do you think that COT is so bullish?
Well, a couple of things. First of all, unlike a lot of people in the sector, I don't just blindly follow the COT report because, first of all, they can lie about everything and probably do lie about a ton of things in it. Second of all, it doesn't have, it's not the same as it used to be. So a lot of people who've only been in this sector a few years, but if you've been in it for 10 or more, you realize that there was a time where the commercials were a dead ringer for what would happen. It was guaranteed that if the commercials were covering shorts, the price would go up, and once they started to make new shorts, the price would go down every time. And probably that ended around the time of the financial crisis when it switched to no matter what the commercials do, the price gets knocked down. So yes, you could have a situation like this. Look, they've been covering for a while, for several weeks now, huge amounts, and the price barely started moving until now. So there's no guarantee of anything. But the fact is there are some kind of correlations, especially when you talk about dramatic changes in the COT report. Obviously, there has definitely been a massive amount of shorting, and it couldn't be clearer that what happened on the July 4th week, starting on that half day on Monday where there was no traders in the office, the only news out was horrible construction spending and automobile sales, and gold's down like $20 and silver's down like 50 cents on a day where nothing else is moving. No doubt that's what that was all about. And then, of course, they followed it up on Thursday night with the flash crash, so that Friday morning people would be selling en masse at the Comex Open, especially after the fabricated jobs report. And sure enough, it turns out that they were continuing. We learned on this Friday what they were doing through that Tuesday, which was to cover shorts. Now, the only thing that really stands out to me is that in this latest bout of short covering, they are now down to the lowest levels of being short, the smallest short position they've had since the ultimate bottom in December 2015. And I don't mean temporary bottom. When prices bottomed in December 2015, the very week the Fed raised rates for the first time, that was the ultimate bottom. At prices below those levels, that was $10.70 for gold and like $13.75 for silver. There's no more mining industry. Every big company will go bankrupt because they already have so much debt outstanding and their reserves are falling and production's falling and will continue to fall no matter what happens to the price. That was the ultimate bottom. And so here we are with prices much higher. I mean, silver is $2.50 higher. Gold is $150, $170 higher. And that's where they started covering again. So obviously they couldn't get the prices down any lower. And here we are moving back up again. You talk about economically, everything is as bad as it can be. The only thing that's not is a couple of the numbers that they fabricate to make it look a little better than, but generally speaking, this is the worst economy of our lifetimes this very second. The retail Armageddon is only exploding right now. It's going to get a lot worse. The whole, if you remember, the supposed, going into the election, we were supposed to be happy as gold and silver holders for Trump winning. And then they changed it that night and said, oh, no, we're going to have Trumpflation, which even though it means inflation, it's bad for gold and good for everything else. And here we are, 7 months later, and every aspect of Trumpflation is dead. I wrote, turning on Trump 2 days after the election, I said this is exactly what's going to happen. I said the economy is going to keep collapsing. I said he's not going to get a single thing done. And even I couldn't have imagined that the political discord would be this bad, to the point that already in 7 months, it's clear they'll never repeal Obamacare. There's never going to be tax cuts. There's never going to be fiscal stimulus. There's never going to be anything. And oh, by the way, we have no budget, and the debt ceiling is going to be hit probably in the next month or two, right in time for that, for the budget discussions, which, by the way, was the same time of year in 2011 when they couldn't get a budget done or a debt ceiling, and S&P downgraded their debt rating from AAA. Of course, they haven't done anything since because they were, threatened to be shut down. But the point is, we're going to have a bloody debt ceiling battle at a level of debt $7 trillion more than it was in 2011, like nothing that's ever been seen before. And as a result, when you see Janet Yellen, I mean, it's really shocking, and I'm rambling, but I'm on a roll. When you see what Janet Yellen said the other day, because remember, those Humphrey Hawkins discussion, testimonies on Capitol Hill have traditionally been like the #1 cartel key attack time, going back to the 2012 Leap Day violation attack, and pretty much every time Bernanke and Yellen have spoken. And this is only a week before the Fed had put out their monetary report saying how stretched valuations are, kind of like the irrational exuberance warning. And then she comes on Capitol Hill and says, the rates are as high as they need to be. And I'm like, even I was like, but you just said a week ago how you were going to be tightening policy. Not that I thought that they were going to, but they just said that. And all of a sudden they turned tail. And since then, the economic data has gotten much weaker. The dollar, for what it's worth against the toilet paper, euro, and yen, is at its lowest level in 10 or 11 months right now. So I would say that the odds that we don't go in recession in the third or fourth quarter are very, very low. And I'm saying right now, just like I said a week or two ago, there's literally no downside from $15 silver and $1,200 gold. The odds of Janet Yellen and the Fed, at the least, saying we are done, officially saying we are done with tightening and considering all options going forward, the odds of that happening by year end, I would say, are 75%. And the second that they say that, that's when you're going to see the money come flying into the safe haven assets like physical gold and silver, which are trading right now. I put out more articles about the valuations of gold, silver, and even platinum in the last few weeks than in the last year combined, of the historic valuation anomalies of silver, how it's traded versus everything else, of the silver gold ratio, the platinum gold ratio, and most importantly, the one that I've been capitalizing on personally. People, you can now buy numismatic gold coins for barely over the price of a brand new minted gold coin. These had premiums of like 50% 10 years ago. So again, we're talking about historic valuation anomalies and the lowest ever inflation adjusted prices at a time where we're about to see, per what Janet Yellen hinted at, the biggest money printing explosion in history. Now, right now, it's starting around the world.
Man, you are fired up. You are on a roll. Well, the Dow is sitting at 21,500 today as we speak. The NASDAQ is at 6330. That's just incredible nosebleed levels. 6330 on the NASDAQ. That's a $6.8 trillion market cap. On the
this has got to be like the third or fourth time in the past month where the Dow is down like 100 points and the NASDAQ is up. That's how ridiculous. I just read yesterday that the inflows into the QQQ, the NASDAQ ETF, the last time they were this big was when Bernanke gave that famous Jackson Hole speech in the middle of 2010 this summer and surprised everyone by saying they were going to do QE2. And well, guess what? Surprise, we're going to have QE4 coming up soon. The difference between 2010, 8, 7, 2, you name it, is that now the economy is falling apart completely with way too much overcapacity of everything. The debt levels are off the chart right now. We've lost our manufacturing base. Now you have secular things like demographics and automation, and Amazon.com, the retail Armageddon. Now you have student loan and auto loan bubbles as big as the housing bubble from 2007 and 8. All these things at a time where all the central banks have already used all their ammunition. And not just the money ammunition, meaning getting their balance sheet to $4.5 trillion. All of them. I mean, the Central Bank of Japan has a $4.5 trillion balance sheet, and so does the euro. They've done all that stuff, and they've also used up their credibility on top of that. No one will ever believe, for everyone who I know everyone wants to believe, yes, things will go down and the Fed will just lower rates from 1 to 0 and everything will be great. No, this time around, when the Fed has to lower rates, it's not going to be taken well. It's going to be an admission that everything that they've done since the financial crisis, 10 years of propaganda, or as I say, market manipulation, money printing, and propaganda, has been a failure. And at that point, the loss of credibility leaks into the currencies. And no, it's not just the dollar. Most likely the dollar will go up because all the other currencies are less liquid. That's when you're going to see the crisis point. I really believe once the Fed even hints that it's done, admits it, not Janet Yellen's little, her vague comment the other day, but when they say, yes, we are as much likely to lower as raise, and we're done with raising, that's going to be the crisis point of confidence in currencies. That's going to be the point where you said, my God, I could have bought gold and silver at the lowest ever inflation-adjusted prices when sentiment in the West was so low that I had premiums like I haven't seen this low ever before. I could have done that. There were so many things that I could have done, but I listened to these idiots tell me that the economy is doing well when I know that I've lost my job and that I lost my house. And everyone I know is cutting back on spending because they have too much debt and not enough opportunity. And all my kids are living at home and all their friends are living at home. I mean, it's unbelievable, the cognitive dissonance that is going on in this world as people just cling to the hope that something good can happen. I mean, think of all the people. I remember when Trump first got in, keep in mind that I, as you know, probably campaigned for him more than anybody, not mostly, all because I hate Hillary Clinton. But when he came in, everyone was all hopeful, it's going to be so great. And if, God forbid, I said anything negative about Trump, they got all mad. I could call him anything I want right now, and no one's going to say anything because everyone realizes there was never hope in the first place, whether it was Hillary, whether it was Trump and all his Goldman Sachs pals, whether it was Bernie Sanders, whether it's anybody. Right now, the end game is going to play out no matter who's in office. And right now, the state of government itself, be it here or in Europe, which is falling apart, or Japan, where they're about to oust Shinzo Abe after 4 years of Abenomics, which is supposed to take 2 years, and now things are much worse than when they started 4 years ago. In Japan, in China, look at Latin America, the whole thing's falling apart. So again, I can't be more emphatic about what's going to happen in the coming. By the end of this year. By the end of this year, Janet Yellen will have already let the cat out of the bag, that there's no such thing as a balance sheet renormalization. They're never going to raise rates again, and there's going to be inflation fears and currency worries that are going to flood the world.
Yeah, I want to back you up on something you said there about, woulda, coulda, shoulda, the things that people can do now. They need to do now while there's still time because, just to flush out that $6.8 trillion market cap on the NASDAQ, today I'm seeing here at Zero Hedge that Netflix has spiked 14% to a new all-time high and a 101 forward PE ratio. Pure nosebleed insanity. Meanwhile, our friends over at Silver Doctors and Craig Hemke reported a week ago here that Terry Duffy, the CEO of the CME Group, told Neil Cavuto on Fox Business, quote, with all that's going on in the world, gold should probably be $5,000 to $6,000 per ounce, end quote. A little bit of the fox guarding the hen house, quoting a CME CEO, but people should probably pay attention.
Well, I don't pay attention to anything a guy like that said. He's a corporate guy, but obviously it's in the back of his mind somewhere what the reality is. There's no way he doesn't know that gold is manipulated on the Comex. He may be, he's obviously just acting. He's got to be an idiot to not know. And but look, when it comes down to it, the whole system is just a bunch of games. It's all become market manipulation. The biggest question I've always had in my mind is why did it accelerate after Trump got in? I would have thought that's when they would have backed off, but that was the date. If you look at any chart of any of the data, the comparison of the data and the stocks, of the earnings expectations, it all goes to that night on election night. Of all things, when you had the Brexit times 10, why then did the stock market separate from reality? How scared were these people? It's almost like they thought with Hillary in office that they were still in charge. and it wasn't so difficult, but that they had to like double and triple their efforts once Trump got in the office, to the point where they even created, a meme overnight that he went from being the worst thing in the world to the best. And but how long has it lasted? 7 months, 8 months? The whole Trump administration has been destroyed by a little bit by what he's done, but mostly by what the system has done to it, to the point where he's a lame duck after 7 months. And nothing's going to get done. And none of those things he wanted to get done would have mattered anyway. It might have bought him a little more time as far as the sentiment and the ability of the manipulators to push markets where they want. But they're no longer going to be able to keep interest rates up as they want them. They want rates to go up to make it look like things are better. But as I said, I wrote my 2.5% enough said article in early January. I said the rates will never go above 2.5%, just like I called the top in January 2014. At 3.0% enough said. I said they'll never go above this level. And they're not going to, because the economy can't take any more debt. That's why Janet Yellen is talking the way she is. You have the most tiny increase in interest rates from all their yabbering for the past year. And look what it's done in the economy. If they truly were going to do what they say they're going to do, they'll, whatever's left of the economy will implode overnight. And it's going to happen anyway. So again, they've been playing a game of chicken. With using the PPT and the ESF and the gold cartel, all partners in the game to try to, to just create memes that don't even make sense. But as long as they can keep the markets under control, they kind of work. And now all those things are falling apart. And don't forget, Janet Yellen, by the way, is up for reappointment next year. She won't be there. Stanley Fischer won't be there. Pretty much the whole Fed is going to be replaced. And on top of that, by the time we get there, there's not a doubt in my mind that we're going to be in a recession. I don't care how much the BLS and the BEA and all the government associations and all their double and triple and quadruple seasonal adjustments, they are not going to be able to mask the fact that the economy is collapsing. And now that the retail Armageddon is really getting in place, remember all the quote jobs that they talk about are in the retail sector. I mean, you mentioned Netflix, right?
Right.
Perfect timing, because just yesterday, after 3 years, we finally, in my household, got rid of DirecTV in lieu of Amazon Prime. Amazon Prime, far better product than Comcast or DirecTV, and costs like a tenth of the amount to use. And that's why everyone is getting away. No one has the money to pay for these things, or do they want to? So they're moving to these cheaper things that require almost no, customer support. I mean, when you think about the amount of jobs that are going to be lost at these companies, DirecTV and Comcast and all of the cable operators, and that's just one business. And then there's the oil business, and then there's the retail business, the bricks and mortar retail business itself. I mean, the farming business, because of the low agricultural price. There's so many businesses that are dead in the water right now. And this is before you truly even have a crisis. And wait till you have some kind of financial crisis, as I call it, the most overdue in history. I mean, it's going to happen. It's never been more overdue, because things have never been so bad, and we've probably never in history. I mean, we've had lots of bubbles in history: the Mississippi bubble, the South Sea bubble, the tulip mania, the dot-com bubble, the 2007, whatever. We've never had dot-com valuations in a Great Depression era, as I call it, because that's what it is. This is the worst economy of my lifetime. I'm 46 years old, and this is the highest valuations we've had in my lifetime, at a time where we have the most debt, and everything that once made the United States great economically, forget politically and all that other stuff, is gone. It's gone. We are the biggest debtor in the world. We are not the manufacturers of the world. We have become a pariah diplomatically and geopolitically. This is the time where the system resets, and I don't mean reset by a meeting. I mean the system, the forces of supply and demand around the world are going to overcome the forces of manipulation in every way, shape, and form. And that's why, I mean, people sitting around watching this stuff in slow motion and not realizing that there's huge changes afoot and not doing anything about it, or holding on to the Dow Jones propaganda average, thinking it's going to keep going up forever when it's when it couldn't be more vulnerable. Certainly in real terms. I mean, maybe they'll hyperinflate it. It's amazing to me. This is the time to protect yourself. This is the best opportunity I've ever seen to get out of overvalued things and into historically undervalued things.
All right, Andy, well, let me ask you this here before we lose you regarding the retail catastrophe in the U.S. economy. Help quantify it just a little bit. Now, earlier here in the interview, you were commenting on the July 4th metal smash, and you remarked that on that day, all there really was bad news, like horrible construction spending. As we're having this conversation here on Tuesday today, Zero Hedge is reporting that home builder stocks hit record high as home builder confidence plunges to 8-month lows. How can one explain this incredible painting of the tape that goes on. In home building stocks, we'll talk about the retail catastrophe. How bad is it? Or is it just that now everything's Amazon? Everybody's turning to Amazon. Amazon's eating everybody's lunch.
Well, when the home builder, the NAHB, gives a negative sentiment reading, you know it's bad because they are the ultimate cheerleaders. They are to home building what CNBC is to stocks. Everything is good all the time. But, look, you could say that for anything. I mean, today the Empire State Manufacturing Index came out, the lowest in like 9 months. Stocks at a record high. I mean, everything. Look at the retail sales numbers last Friday. NASDAQ goes up 50 points Friday and 30 points yesterday and 10 points today. It doesn't matter. I don't even know, like back in the dot-com era when the tech stocks were soaring, there was a meme behind it, the internet, right? These tech stocks can capitalize on the internet. And yes, there is new technology always. But, we have the NASDAQ going up as if there's like a brand new technology. But there isn't. There's only one brand new technology out there, and that's Bitcoin, which has nothing to do with the NASDAQ. Everything else is just plain old bubble based on the PPT supporting stocks and with the Dow Jones, with the dead ringer algorithm every single day. But in the real world, I mean, retail Armageddon is an understatement of what's going on. It's the whole death of the brick and mortar business. It's the whole death of entire businesses just for simply being inefficient. I mean, you look in supermarkets, you go in there, I talk about it all the time, there's like millions of products there, and most people buy like 20 of the 10,000 products. And it's all these aisles and aisles and aisles of commercial retail space and employees that you don't need. I mean, there's so many businesses like that are being exploited, let alone that we're in a bad economy right now. So, I mean, the way I'm looking at it, we're going to have hundreds of thousands, maybe millions of job losses just in the retail sector alone, simply due to efficiency. And it's not that everyone is using Amazon per se. Amazon is just a giant example of how the retail industry in general is inefficient. And but that goes across all kinds of businesses. What's traditional is being replaced by what's new. And Amazon is certainly the biggest player in that space. But, I just think of banks. I talk about it on podcasts all the time. I think 10 years from now, we'll have half the supermarkets and half the banks. I mean, who uses a bank anymore for anything? I mean, I wouldn't even put my money in a bank, but I keep $1,000 in case I need a money order. I mean, what else do you need a bank for? I don't even use cash anymore. And you got thousands and thousands of banks and JP Morgan banks and local banks and TCF banks and key banks. Who goes in a bank? I mean, all these things are going to be replaced by online applications. For all I know, Amazon will become the biggest banker in the country 10 years from now. And so, if you're in a meme where you have the Fed saying, well, monetary policy is based on the unemployment rate, which is already comical because at some point they're going to have like a 0% unemployment rate, but like a 50% labor participation rate. It gets to the point where the Fed itself is boxing itself in a corner because these jobs are going to keep getting lost and the participation is going to keep getting lost to the point where they're going to pin themselves into the corner to have to lower rates and do QE4 simply by their own parameters. And I just think it's the time when if you have kids, man, you better be careful how you instruct them in the world because they are going to be in really, really dire trouble if they are not in the very, very few places spending their time and money and energy trying to prepare for the future.
All right. And for listeners who want to prepare for the future, Andy, how can they get precious metals through you?
Yes, milesfranklin.com. God, we've been in business 28 years without a single registered complaint. We are working as hard as we can to educate. Our brokers have been around on average for like 30 years, and we will give you the best buyback price in the industry. We have the best storage programs. We provide this blog every day for free. And of course, you can get us at milesfranklin.com. You can call us at 800-822-8080, or you can email me at ahoffman@milesfranklin.com.
All right, guys. And Andy just mentioned their buyback, giving you the best buyback price in the business. Don't sell. My advice to you is if you have physical silver and physical gold, hang on to them with every ounce of conviction that you can muster and buy more. That's my personal philosophy.
I only say that to make the point that I mean, look, we're going to be competitive with anyone on price. And if anyone is offering anything materially lower than us, and by material, it usually means like 0.5%, I can guarantee you that A, they're not doing so well, and B, that if you ever tried to sell it back to them, they would ream you on the price. Whereas we're always going to be fair on both the buy and sell side, which most people do not understand when they're in this highly unregulated business, except, by the way, our home state of business. Our home state of Minnesota, which is the only state in the entire country which regulates bullion dealers.
I'm actually glad that we're having this conversation on buying back, because people have asked me in the past, well, what happens when silver hits 600, 700, or 1,000? Who am I going to sell it to? Oh, there will be people who will buy it, and they will resell it, and Andy Hoffman at Miles Franklin can help you out on both ends of the transaction. Andy, thanks so much for your time.
Very welcome.
All right. And guys, thank you so much for tuning in. We very much appreciate your support. A shout out to our patrons over at Patreon/SGT Report. You are making a big difference for us. You're keeping us in the truth fight, regardless of what Google and YouTube do to strangle us and shut us up. Thanks so much for tuning in. And for real news 24/7, visit us at sgtreport.com. God bless.
We as biological, entities, we've basically given birth to non-biological entities which are beginning to advance at an exponential rate.